Combining liquidity plus market structure plus order block is one of the core ideas in smart money concept. It's going to help traders understand where big institutions enter the market. Now, in this video, I'm going to break it down to you guys step by step on how you can be able to use this particular concept to analyze your chart. First of all, we'll be talking about liquidity first. After liquidity, we'll be combining it with market structure, and then we are going to be placing some emphasis on order blocks. So now let's start with liquidity. What is liquidity? Liquidity is where retail trader place their stop loss, as easy as that. This is my entry here on GBPUSD, and this is my stop loss. This is where my stop loss is located, in this particular junction here. Then that is liquidity. This particular area, everything above here is liquidity. This is where if price should hit that stop loss, I'm out, I'm losing money. So which means the money is not resting over here. The money is resting above here if I should hit my stop loss. So that is what we are calling liquidity. Now we have common liquidity areas. So many common liquidity areas. I'm going to be listing 5 of them. 5 common liquidity areas, you understand, for you guys. Now, number 1 is equal highs. We have our equal highs, something like this. Let me be using illustration for this particular video. Equal highs. This is our equal highs from here to here. Liquidity reside in that particular place. How? If you were to take trade from this particular area, your entry might be here. Where will you place your stop loss? Guess where you're going to place your stop loss. You are placing your stop loss above here. Surely your stop loss should be above here. You see, liquidity resides above there because that is where we are placing your stop loss. The second liquidity area we have is equal lows. The same pattern but in a different way. Equal lows. For some traders, this should be where they are going to enter a trade. Why? A break of structure. Forgetting that this low is our equal low, and price will be residing, and liquidity will be residing there. And our stop loss will be below here. So everything below here is where liquidity is residing. Is where liquidity is what? Residing. You can see this is our equal highs. This is our equal low example. Another example we have is our previous day high and day low. I'm going to use charts for this example. Using our chart as example, you can see this is our yesterday daily candlestick. This is the high of it, and this is the low of it. What does this have to tell you? The price liquidity resides above here and also below here. From this, you can see price already sweep the liquidity below. After taking the sell side liquidity, price will be pushing further to take away the buy side liquidity. These are places where liquidity resides. below here, and above here. We have our trend line, highs and low. Let me use our illustration for this. If this should be our market movement, under market structure, are we bullish or are we bearish with all these market movements? Are we bullish or are we bearish? We are bullish because of so many break of structures to the upside. We can call this higher high, higher low, higher high, higher low, higher high, and higher lows. Now, this is how we're going to mark. We are not going to mark our trend line like this. No, it's not advisable. If you're in the bullish movement, our trend line should be from here to here. This is how our trend line should be marked. Now, where does liquidity reside? Liquidity reside here, below here, below here. All these places are area of congruence whereby liquidity are residing. Below there, below here. Now, imagine price starts retracing or wanted to retrace. You see something like this, a massive pullback, giving you our what? Our equal highs, giving you our equal highs. Remember how we talk about equal highs being a point of interest for liquidity, and start doing what? Start clearing all the whole liquidity beside you. You cannot see a massive one candlestick that will just go down and clear all the whole liquidity deciding below here with just only one massive candlestick. You can see that. You understand? So this is where our liquidity is being residing in our trend line highs and low. Now, for a trend line low, you can have a series of these: lower low, lower low, lower high, lower low, lower high, lower low, lower high. How I want to mark our trend line? Like this? No, not like that. I want to mark a trend line like this. This is how you're going to mark a trend line, like this. And where does liquidity reside? Liquidity reside over here. Guys, I'm so sorry for the noise, okay, but I have to do this video and send it out. Liquidity reside over here. Liquidity reside over here. So if price wanted to start going back, you just see something like this, equal lows, and boom, taking out all the liquidity residing here. If your entry should be in this particular area, luckily your entry was here, TP here, stop loss there, what will happen to you? Price will take you out, as easy as that. So now, the next step we'll be talking about is consolidation, highs and low. Now, you guys already know what is consolidation. If price is consolidating, you know it already. Price will just be doing no movement, just be doing something like this, creating a series of high and low in the same compartment. No actual movement, just creating something like this. This is what we call consolidation. Now, where does liquidity reside in this particular area? Liquidity reside above here and also below here. These are places whereby liquidity resides. If you're not smart enough and you want to start entering for a new buy here, because you thought price might reach this particular area and continue consolidating, you can see something like this, where price will all of a sudden say, okay, I'm not going anywhere again, and price will take you out, and you're going to lose your money for that. You understand? So these are places, these are 5 places where liquidity reside: higher equal highs, equal lows, previous day high and low, trend line highs and low, and consolidation highs and low. Now, I'm going to give you how you're going to trade this liquidity. You understand? Remember, this is only liquidity strategy. You're going to combine them with market structure and under block together to have a A+ setup. So how are you going to be able to trade only liquidity? Only liquidity. Now, let's use our equal highs and equal low for example. If you see something like this, a normal break of structure to the upside, all of a sudden we have our equal highs. all I'm expecting for you to do, mark at the fair value gap or other block that's been seen over here. You wait for price to do what? To clear liquidity, move back, break structure, and tap into your entry before you start doing what? Before you start selling. As easy, your stop loss should be here. We are going to target the next liquidity area. As easy as that. This is what I'm expecting you to do in the equal highs and equal lows. Exactly the same thing. In your previous day high and previous day low, what are you waiting for? If this should be the previous day high, you mark out this particular place, which is your previous day low. If this will be your candlestick, you mark out this place, which is your previous day low, and you wait for price. If you have something like this, price sweeping liquidity down, this is big. Price sweeping liquidity down after this, sweeping this previous day candlestick, sweeping it down. You go down to your 4-hour time frame, and what are you going to be expecting? Expecting a change of character to the upside, then you buy. Understand? If price sweep your previous day low, you are buying. If price sweep your previous day high, we are selling. As easy as that. So now let's talk about trend line. I've talked to you guys about trend line. Trend line, how to enter through this thing through trend line. These are bullish trend line. Don't mind the structure. Just know that these are bullish trend line for the analysis. And you want to enter in this particular market. You're going to wait for price to do what? The price to retest. Sweep this liquidity. Give us a failure low. This particular low now. Price is not going to be able to take it out. So price might start in something here and start going up. Then this should be an entry here, and boom to the upside. And boom to the upside. You're going to see this a lot in the market. You're going to see this a lot in the market. It's our price to sweep this low. After taking this low, after breaking below here, some people might be waiting to enter that sell position from here. But you're going to lose. You're going to lose if you're waiting to enter a sell position from that particular area. Trust me, you're going to lose. All you need to do is wait for your buy position, because we are bullish. Why are you selling when we are bullish? After the sweep of this particular low, a break of structure has been occurred. Yeah. Then what are you waiting for? You're not waiting for any confirmation. You enter from here. You enter from there straight, and boom to where? To the upside. Where is my illustration? Oh, okay. Stop loss below here, and boom to the upside. As easy as that. Now, in a consolidation, how are you going to enter in a consolidation? If price is doing something like this, creating highs, low, without breaking anything, all you need to do is just mark out your high and the low. Apply your break and retest strategy. A sweep, a retest, and a boom to the upside. As simple as that. Now let's talk about market structure.